Do you want to secure 100K in business funding fast without headaches of rejection? In this video, I'm going to show you the secrets that the banks do not tell you. Stay tuned. Business funding is something that is the hottest thing going on in the business world, right? And in this video, I want to talk about how to obtain this, right? Because I've been in the funding space for 4 years, helping people get access to funding, helping them rebuild their credit in order to leverage things in their life, right? And I've had the pleasure of being partners with over 250 lenders in the space, and so in this video, I want to break down and just give a lot of value because there are so many people in the community in just different parts of the world who need this type of information and can apply it maybe to their own industry. So without further ado, we're going to get right into it. So the first thing that I want to talk about above everything is your mindset. See, Tony Robbins talks about really identifying with an identity that serves you, right? And he talks about switching states. Like we have the ability to control the state that we're in. So if you want to be happy, you're going to do things that make you happy. And I think most people associate things and methodologies in their mind that don't serve them. So, like, for example, I used to be a firm believer in like zodiac signs, right? I think they're good indications sometimes of people, but at the end of the day, you kind of associate yourself with things that don't really serve you, right? And for example, I'm a Capricorn. Some people say Capricorns are assholes, things of that nature, but they're hardworking, this, and that. Well, the reason why I say that is because anybody can be hardworking. It's not necessarily an identifying trait with certain people. Everybody has the ability to work hard. So it's not something that makes you particularly unique, right? It's just an identity that you associate with, and that because you associate with, you're going to do things that follow that metric, if that makes sense. So I think the mindset is where it starts because how you think about everything is how you execute on everything, right? And that's that. So what things do we have to consider? Number one, we have to consider abandoning old beliefs. These are traumas that have been passed down from our families. Our relationships are very strung out. So, like, maybe you had a person in your family that didn't believe in having a lot of money. And so you think money is not important. When in all actuality, everything that we're working for, you need the resource. And whether it's money or not, we have to understand that the currency, no matter what it is, right? Back in the day, it was a barter system. If you had bread and I had corn or whatever, and we needed that, that's the currency. It just so happens that in 2025, it's money, right? It may not mean anything, but it's the currency that we need in order to function. So no matter what that is, whether it's crops, whether it's cattle, that is basically the new form of the barter system, right? And we're using money to do so. But we have to change our relationships with things that are not serving us. Number two is that we want to surround ourselves with winners. I'm pretty sure you've heard this before. And if you haven't, maybe this is a first and I didn't make this up. But simply, it goes like this. If you're around 5 millionaires, you'll be the sixth. Now, the same thing works in the negative reality of that as well, right? If you're around 5 criminals, you're more likely to be a criminal. So who you associate yourself with matters, right? We have people in our life who are in our life for a reason and a season. And therefore, we have to draw the line with some of the people that we associate with in order for us to win. Because one thing I notice is that if you're a firm believer in God, God will remove people from your life and make room for new ones. And that's what I firmly believe. So the third thing is understanding your environment. Your environment ultimately is going to dictate how you're shaped. So again, if you're in a negative environment, you're more likely to do negative things. And one thing I understand with us in America is that credit equals the quality of your life. And so, if this is a control variable and we can do the things that we need to do in order to put ourselves in position, we have to understand the rules of the game. Now, I can't speak over in other countries, other places like Europe, China, where they have their own separate methodologies. But at the end of the day, they model similar things, and you have to know the rules of the game so that you're able to play at a very, very high level. And with that, once we understand those three things, you're going to create habits in yourself to win. Now, I'm not saying that this means be perfect. It's far from that. Like, this is a journey, and truly you are running your own race. And what you have to do, shout out to my guy Charles, he talks about this a lot, right? Give yourself grace, but also, just keep focusing on the journey ahead. And when you create those habits, you'll automatically set up a success system to win. And we have to do that. So I love this quote here, and it says, credit is only bad when you don't invest in assets that give you a return. I think when a lot of people think about assets, they don't put themselves in that category. And the biggest ROI that you're going to have on your life is focusing on yourself and focusing on the areas that are mentally, physically, emotionally, and spiritually in your favor. So invest in yourself. So now we're going to get into understanding the basics of credit now that our mindset is pretty sharp. So let's get into it. So what is a credit score? A credit score is a 3-digit score ranging from 300 to 850. And this is something that lenders are using to create a track record and understand the likelihood of you being able to pay them back. You can look at it as a resume, right? Think about it. If you were a person that were loaning out money and you can see, like if we were in a game and you can see people's track record over their head and they're talking about coming to get money from you, would you lend that money to them if you could see the results of people? Right? Who are you likely to give more money to? People who qualify for your criteria. And that's the way the banks think as well. Now, who determines and pulls this information? The three major credit agencies dictate or they pull this information in order to generate what is called your credit score. And these people are, first of all, they're individually owned, but it's Equifax, Experian, and TransUnion. These are the major data furnishers in the game that pull things from different resources because we sign so much paperwork in America, our information is out there. They pull this information in order to get a gist about who you are as a person without even meeting you. So, how is your credit score determined? Your credit score is broken up into 5 different sections, which I'm going to break down now. The first section is payment history, which is 35% of your score, right? So you want to pay things on time. The next thing is the amounts owed, which is also called your utilization. We want to make sure that we're using the credit, obviously, right? But we want to keep our utilization down. So let's say I have a $300 credit card. I can max it out all I want. That's what people don't understand about credit cards. You can max it out, but you have to pay it down by a certain date. And as long as it's under a certain threshold, which I recommend for clients under 10%, then you're able to increase your credit score because it looks like you don't need the credit, but you use the credit, if that makes sense. So the next thing is your credit history, which is the length of your credit, right? This is 15% of your score. You want to make sure you have long lasting relationships with the people in your space. The next thing is credit mix. How many different types of credit can you handle? Whether it's an auto loan, whether it's um, a rental payment, whether it's anything that will report to your credit in long term is what you want. And then you also have the last category, which is 10% as well, which is new credit. We should be diving into new credit maybe twice a year. This is important simply because, like, number one, there's always going to be other opportunities, right? Which you may not be able to use your current credit for, right? But it plays with the age. So acquiring new credit is sometimes necessary depending on what you're doing, right? And that's 10% of your score. And the main thing that I want people to understand is definitely the first section, right? Which talks about if you're late one payment, it can drop your payment 100 points. Now, understanding the breakdown of everything, you start to see like, yeah, that's 35% of my score. I get it. I need to pay on time and I need to make sure that if I'm using my credit, I need to keep it down. If you could do just that alone, you'll set yourself apart from so many people. So, what factors actually affect your credit score? And what ways can I improve my credit score? Number one is late payments. So, we can avoid late payments. But then on the plus side of that, to improve your score, we want to make sure we're on time. We also want to keep our utilization down again. So, that's going to involve paying off debt. The other thing is closing accounts, right? You don't want to close accounts, right? It looks bad to lenders, right? We want to keep those open. Maybe you have too many revolving accounts. You're picking up too many cards or too many lines of credit per year, and it's bringing down your score, which is messing around with the age of your credit as well. And then you have opening too many cards. We want to avoid opening too many cards. We want to maintain the ones we have in order to build better and stronger and lengthier relationships with these entities. So the next thing that gets into is the soft hits, which are also called soft inquiries, and a hard hit, which is a hard inquiry. So the major difference between these two is that a soft inquiry, aka a soft hit, is when you actually pull your credit, right? Um, this is when you actually pull your own credit, and this is without penalty, right? The other thing is hard hits where another entity is pulling, right? And there are certain entities that don't fall within this, right? A lender definitely falls within a hard hit because you're trying to obtain a line of credit, which is a little bit more risky, right? Then you have things like insurance companies. Sometimes they pull your credit score, but it's not directly impacting to your insurance. Different things like that, depending on the type of insurance, right? So the major difference is you pulling your score and versus a major entity pulling your score. So now we're getting to the best part, one of the best parts, right? You want to structure your business to become sexy to the banks. I want to be able to walk into a bank and know that I'm going to get approved because 9 times out of 10, a lot of people are walking into a bank and they're not feeling confident because they don't know. And the truth is, banks, as weirdly as it sounds, it seems like they don't want you to know. Otherwise, they would have put it on their website, which is why I do what I do because I keep it 100, right? With my clients when it comes to like, hey, this is what you need. You either got it or you don't, because it saves people so much time and it saves people so much headache. So let's get right into it. So the first way we do that is getting a copy of our credit report. And no matter where you are in the world, like I said before, you want to understand the rules of the game because when you understand the rules of the game, you never stay the same. What you there's a thing that we talk about in underwriting because I've been an underwriter for a year for a mortgage company, and we talk about what you see you can't unsee, right? When it comes to underwriting, if I see something by looking at it, I have to condition for the documentation in order to support something because you weren't supposed to show that in the first place. But now that I've seen it, we have to address it, right? And the same thing goes on in the world that we live in, right? You have to be able to address these matters at hand as they come up, and it'll put you in a way, way, way better position when you do that. So, why even get my report? Here's the truth. We need to understand what mistakes we've made. I remember being at a point in my life where I never checked my credit score. It first of all, it just wasn't a thing. I didn't see a lot of people in my family doing it. Like I just didn't understand it. Right. So when I got to college and I'm offered these lines of credit because at that time I had a 740, I didn't know what to do with it. I was uneducated. So what did I do? Like any other college student, I blew that thing. You know, I got that out of there. Right. And so, what I learned along the journey is that credit equals the quality of life, and it gives you access to the following things when you have great credit. Number one, your negotiation power goes up. You get better interest rates. You get um, treated better just in general, just because of your credit and who you are. You get better rental terms. You get better rewards on your credit cards, better interest rates on your cars, everything. And so, just by being in a bad position, it makes your life exponentially harder. And you could be saving yourself hundreds of thousands of dollars by just putting yourself in position. So, how do we obtain a copy of our credit report? We want to visit www.annualcreditreport.com, and this allows you to actually pull your credit report from the three major bureaus or credit agencies, I should say, which are Experian, Equifax, and TransUnion. And the beautiful part about this is that you can see literally what's going on your credit report. Now, this is backed by the Federal Trade Commission, and they're designed to govern companies and also protect consumers from unlawful practices, right? And so this is a very valid resource. It used to be that you can pull your credit report like once a year or something like that. Now I think you can pull weekly. And that way you get updates, or you can get something like an Experian app, or some type of credit app where you can see all three bureaus specifically and see what's changing. So now that we understand and see our mistakes, what do we need to do? Like what can I do next, Nick? What can I do? And step two is optimize your credit profile. Now we want to ask ourselves, why is this important? Believe it or not, guys, there are people in this space who are getting denied for having a 750, 800 credit score. And you probably wonder, no, that's crazy. The fact of the matter is, it's true. And the reason why they're getting denied is because they don't have the proper data points on their credit report in order to get the things that they want. See, lenders are looking for specific things. And if you don't understand that, you're really shooting in the dark, right? You're shooting an arrow in a dark room and hoping it hits, and it won't. And that's why people are in the position that they in, because the gap between where we are and where we want to be is the information. So what does this actually mean? So when we're dealing with clients, we let them know the positive things that they're doing and also the negative things that they're doing. So if you have negative derogatory items on your credit report, of course, you're going to have to go through credit repair. You're going to have to go through a process in order to remove these negative items from your account. But at the same time, when we're in the phase of rebuilding, you're going to have to also add positive trade lines to your credit report in order to boost your score, thicken the profile, and ultimately build longer relationships with other entities. So, and what I'm going to do is, because we work with 250 plus lenders in our space, that I'm going to break down some of the commonalities as far as requirements that if you did these, you would put yourself in position to get funding in the next 6 months, depending on where your credit is. Obviously, what is your financial situation that you're able to do? So let's get into those steps. So the first step slash requirement is having a 700 plus credit score, reporting on all the major credit agencies. So the reason why this is so powerful is because, let's say I have one bureau that, or one report that is doing very well, right? I can get funding on just that report alone. So you can literally find banks that literally pull from Experian, Equifax, and TransUnion. And the beautiful part is they don't communicate because they are separate entities. So what you get on Experian, Equifax, and TransUnion won't know. So if you got funding on that side, then they would know. Now, obviously, there are banks that pull from two, but they still don't communicate with the third, which is beautiful, right? Pardon me. So, with that knowledge alone, I rather just have people go and get everything, so that way you can maximize your funding. You may get $100,000 on your first run, or $250,000 on your first run. It all depends on how everything is set up. So, number two, we want 2 years of clean credit history, like no derogatory items when you're going for funding. And I've listed the following: no tax liens, no car repos, um, no student loan collections, no evictions, bankruptcies, depending on if they're discharged in the last 2 years, can be worked out. But these are the list of things that you cannot have on your credit report. Medical collections have changed in recent times where they're not factoring that in as much to your credit score because it's crazy to penalize somebody who was hurt, right? You got to pay medical bills anyway. So why are they even being a factor? And I believe that changed as of recently, maybe within the last few months or so, maybe even last year going into this year. So we want no new accounts in the last 6 months. No new accounts. The reason why we don't want to do that is because you don't want to apply for things that could potentially put you in a certain position. So, like, even when I see people applying for homes as an underwriter, people have applied for things, or maybe they have certain outstanding debts, and we have to factor that into your DTI. So, if you think about that from a home perspective, you can be disqualifying yourself because you decided to get that new account and you didn't know, right? You didn't know at all, but these are the things that if you're working with a great realtor and a great just professionals all across the board, they'll tell you these things. Just don't apply for anything. Apply for things in this season where you don't need anything, right? Just so that you can prepare for the next phase. So the next thing is 3 or more primary trade lines. Trade lines could be any relationships that you have with other entities, right? It can be an auto loan, it could be a mortgage, it could be a credit card, it could be a credit builder loan. There's so many ways to add trade lines to your credit report. It's insane. And if somebody needed help doing that, we have access to trade lines as well to be able to boost your credit score, to get you ready to apply. Um, for that dream house, that home, car, etc. So the next point is 60% or lower revolving debt across the board. So for the simplest examples, if I had one credit card at $100, I can only use $60, right? And so you can imagine when you have multiple cards, you add up all the balances of your cards and you take the 60% of that. So if I had $100,000 in lines of credit and revolving debt, I can only use 60 grand, right? Across the board. That may be across 5 cards, whatever the case may be. Keep your utilization as low as possible in that regard. So we want 6 or less hard inquiries on our credit report. And the reason why is because we don't want to look desperate when we're going for funding. A lot of people get messed off with this when they go to the dealership and they get their credit run through the ringer. I've been the victim of that as well until they get an appropriate lender for your credit situation. And that could be 20, 30 lenders in. And now you're seeing all these inquiries on credit reports from banks you never even received anything from. Yes, you can get all of those removed, right? But people don't know that. People pulling your credit, and that ultimately makes you look desperate. And then you wonder why you're getting instant denials. Like, you may have put in an application and hours later, they're like, nope, because now they have computers, AI, and everything to determine if a person is even feasible. And then a person may look at it to be like, oh, okay, we can help this person. So that's how the technology is moving. So with that, we want to make sure that we have appropriate income. Very simple. Entities, banks, things of that nature, they want to know that you can actually pay the loan back, right? It's as simple as that. So just have a provable source of income. You must live in the United States. I get tons of DMs, and it's crazy that I wish I could serve people outside the country. And maybe there will be a platform in the future. I'm sure somebody's going to build out to where we can bridge the gap and do that. But as it stands, we can only help people in the US. And we do have particular lenders who can cover the California and Iowa. It's just for particular lenders that we have that we can't, right? Um, but there are some alternatives that we have for that as well. Under the age of 72, which I think this falls in line with how life insurance works. The older you are, the more of a liability you are. And I think they just capped that off because at the age of 72, you unfortunately you can be on your way out of here. We hope to live to like very older, ages, but let's be real, you become more of a liability as you get older, especially if you're not taking care of yourself. So I imagine this rule is simply similar to an insurance standpoint, a risk standpoint for an entity in general. So you must be current at a job. Um, Banks and financial institutions like to see consistency. And the moment that you can show that, you'll put yourself in the door. So with that being said, your credit is now in position. But Nick, what's next? The next thing we want to do is build a business that stands alone. If you want to look at a business in general, you want to look at it as a parent-child relationship. See, we're the parent as the business owners, and we're trying to build this child up to be a member of society. You want to build a business, ultimately an adult that can stand on their own. That's the job of a parent, right? And our business is no different. So we're doing all these things. We're co-signing on behalf of our business to make sure it can then ultimately make an impact on everything we're doing, including our lives in general. So the importance of a structured business. I am a firm believer that in order to escape the 9 to 5 grind, we have to be thinking like the big players in the game. And I think when you are on a high level of creativity, that you want to just help people. You want to just put people in a better position. And when I look at companies like the Apples, the Amazons, the Nvidia, the Charles Schwabs, like all these big type of major corporations, they're impacting society in major ways. They're creating their own ecosystems that are helping the government in a way, and therefore you get a tax break for that. So people are playing the wrong field. If you read books like Rich Dad Poor Dad, I think he talks about the quadrant and how people are just on the wrong side of business. Like when you're an entrepreneur and business owner, you have more control, even though it's more risk, but it's more control, which is crazy to think about that. I can be in the riskiest part of my life, but yet I can create stability and create control that most people will never be able to do. And that's the importance of a structured business. The next 3 slides, I'm going to go over what you need to structure your business properly. This is a free book on our website. So you can go to www.QuikBillsLLC.com, and actually on the home page, you can download this exact reading material for free. So I just wanted to give you guys some value on this. So the main thing I'm going to focus on is the left-hand side of the screen, which is the list category. So we need a corporate structure. No more sole proprietors. We have to elevate into the next bracket, which is a LLC, S Corp, C Corp, and things of that nature. The next thing we want to do is have a business name. We want a unique business name that doesn't show that we're a risky business. And there are tips on that in the book, which is in the link in the description. So the next thing is a virtual address. You can have either a virtual address or a physical address. It really doesn't matter. At the end of the day, you need to be able to look legitimate in the eyes of the government. For businesses like mine, being in the credit space and funding space, I can be anywhere in the world. So therefore, a virtual address makes sense for my business. But then I also have a place to physically go get mail, which is cool because it's a legitimate building, not just an address, right? And the next thing we need is a business phone number. And the reason why I'm hitting on these data points is because banks can simply do research on a business, right? They can simply, if you're not online, they're going to be like, this can't be real, right? And even if you're a new business, like as long as you got the credit, you can leverage all of that and bypass all of that because you're qualified, right? But I like to make sure that I'm overly qualified because again, I want to make sure I look sexy to the banks in general so that I can get whatever I want, essentially. So the next thing is a business email. I don't think people understand like how this greatly affects us. Like imagine dealing with Apple. Apple is a mega corporation. Look at all their emails. They're all branded. I don't know if I would trust Apple the same if they had a Gmail. And I know people don't think that's a big deal, but this is why stuff looks scammy or people never make it to the inbox to be able to connect with people because you're looking like a scam. As opposed to if this is a real entity, then it's a likelihood that somebody will interact with you because you look like an actual company. The next thing is a website. A lot of people get hung up over this. They have social media profiles and they think that's enough. But what would happen if, everything was taken away from you tomorrow, right? And not saying a website can't as well, but at least you have your leads, right? And that's a place where you can create an ecosystem in order for people to specifically learn what you do, to specifically learn about your business. So I think a website, in addition to all these other channels, is key. The next thing is an EIN. An EIN is super, super important. It's a 9-digit number used for tax purposes. So when you're opening business bank accounts, things of that nature, this is key for that. And when you file for taxes, you use your EIN as well. So now that leads us to part 3, which is the final piece of this particular section. And so we have what's called a NASIX code. A NASIX code is basically a self-elected code that you can associate with your business as far as the category of the business. So if you're in a consulting space, there's a code for that. If you do education, there's a code for that. And the reason why this is important, because banks will not tell you that if you associate with a risky business, it drastically decreases your chances for certain levels of funding. And it doesn't mean lie. It means strategically structure your business in a way so that you can maximize on output, right? And this is a self-elected code that you can pick for your business. And you can put that actually and associate that on the next point, which is your DUNS number, which stands for Dun and Bradstreet. So this is an organization that has been around for a number of years and has been related to business as far as my research is, as far as I've been able to come to. And this is a 9-digit number as well to determine the reliability and credibility of a company. So this is essentially tied to your business credit score. So just like we have personal credit scores, we have business credit scores as well. Then the next thing is a business bank account. No commingling of funds. You cannot operate a business that you're doing personal things out of. Um, you can literally start a business bank account, especially once your business is filed, and go put in 50 to $100 and you have a business bank account. You can also open things online. There's tons of ways. And then the last point is listing your actual business online in as many places as possible. So you have list yourself, I think .net. You have Google Business Profile. Of course, you have social media, and you want to be able to brand yourself the best way you know how. So put yourself in as many places online as possible. But Nick, so now that I have the credit score of my dreams, it's time to get the bag, right? I'm trying to be like my man's, right? This is the point that you want to get yourself to, right? You had a 772, and now the options and everything opens up. So what's actually available? Well, in terms of the funding world, there are exactly 1, 2, 3, 4, 5, 6, 7 different types of ways, right, to get funding. And this is something that I created that I've done the research on. So right now, as QuikBills stands, we do traditional funding, we do credit-based funding, and in a way we do like niche-based and alternative lending. And the reason why is because that's just what we decide to focus on. But there are other things that people can focus on depending on your type of field, your niche, industry, etc. And so you have grants, you have crowdfunding. When you're in the big boy game, you get into equity and venture capital. These are people with millions, hundreds of millions of dollars. A prime example of venture capitalists could be like Shark Tank, right? Which is a popular show for entrepreneurs to be able to get their business off the ground. And so, as you can see, there are so many things that open up that people didn't even think about. Like you can get funding based on your revenue. So if you have a bad credit, Maybe you have horrible credit, but you're making a lot in your business. And yes, it's possible, guys, that you can do that. So you're able to get access to funding just off your invoicing alone. So the next thing that I want to talk about, and we're approaching the towards the end of the presentation in the last few slides, is the power of leverage. See, once you get the bag, we have to understand what to do with it. And like the great Spider-Man quote, or at least as it was quoted in the movie, with great power comes great responsibility. And I'm a firm believer in that. Just because you get the bag is like, okay, now, Nick, what do you do with it? You invest in yourself responsibly. You hire a coach. You get some mentorship, because what you want to do is cut the line and avoid the mistakes, but you want to remove that limiting belief like, hey, I don't have the money. Now that you have the money, what would you do with it? And the power of leverage is not just like, it could be tools, it can be people, it could be systems. Like it's so many things that you can leverage so that way you can move the needle forward. And by using these funds, you're able to take that sense of doubt out of my head, like, okay, I can't do this, because so many of us fall short because we don't have the money. So how does this leverage cycle actually look um, to a normal person versus a person that's really trying to make a difference in their community, in the world, etc.? How does that look? So the average person is going to take their time. They're going to go to their job and they're going to pay bills and they're going to chill for the weekend, all that good stuff. Now, if you want to be on the other side, like I feel like where I'm going and where I see myself, you want to take your time from your job, because I'm working a 9 to 5 as well, but I'm having small successes in my business that I feel like people can value, right? And so you want to take your time, you want to go to your job. Of course, you want to pay your bills, because if you don't have a roof over your head, it's hard to function, right? But then you take that money left, instead of going to spend it and party on things, spend it on the right things, right? And of course, this is about balance and organizing your funds in a way that's going to benefit you. So you take the money left, you invest in yourself. This is knowledge, this is skills, coaches that can propel you in a different direction. And then once you have the blueprint from whatever you've learned, you want to put that directly into action, right? Rapid testing to see what actually works and what doesn't work. Because the difference between people who are successful and who are not is because of the rapid testing that they do. They failed more times than you. So therefore, they know exactly what they don't like and what they do like. And most people won't tell you that. The next thing is actually giving those results, right? Like you essentially are rapid testing enough to where you're learning so quick on what not to do. I've learned all this information in 4 years because it's been rapid testing. Okay, I'm gonna try this. Okay, this didn't work. And it doesn't mean it doesn't work for everybody. It just didn't work for me, right? And then once you make more money after you find out what works, you're able to acquire more assets, and essentially it buys you more time. So I wanted to leave people with this. The gap between where you are and the next level are the decisions you make today. So if you get around those people, if you get your mindset sharp, if you really take out those beliefs and reprogram yourself, you'll be surprised that within the next 2 to 3 years, your life can change. The next 6 months, the next 12 months, your life can change. So therefore, you make the decisions today in order to make up for your future tomorrows, right? And so this leads me to the final piece, which is the summary. So we've identified, the credit report. We identify our mindset. We identify what we need to actually reach our goals. What are the funding requirements? Like what aspects, like how can I build my business up in a way to win? And then we wrapped it up with the power of leverage. So this resource is available on our website. If you go again to www.QuikBills, that's QuikBills LLC you'll be able to access this resource for free. And if you have less than perfect credit, guys, we've actually been putting together a team, a system in order to help people repair their credit and put themselves on the right path. And so if you have less than perfect credit, we definitely want to help you in a way so that way we're able to take your life to the next level. So I hope you guys got a lot of value out of this video. Please like, comment, and subscribe. Leave a comment of what you like or what you didn't like or what you want to see more of. And I will see you guys in the next video. Peace.